Welcome back to the channel, everyone. I hope you're having an amazing day. Before we dive into today's analysis, make sure you hit that like button, subscribe to the channel, and turn on notifications so you never miss our latest updates on cryptocurrencies, market trends, investing opportunities, and the biggest stories shaping the financial world. Today we're taking a deep dive into Cardano, better known by its ticker ADA, because the cryptocurrency has come under significant selling pressure over the past day, leaving many investors wondering what exactly is happening and whether this decline is something to worry about. ADA has lost several percentage points in a relatively short period of time, and naturally, investors are looking for answers. Is there a major problem with the Cardano network? Has something fundamentally changed? Or is this simply another example of broader market volatility affecting even the strongest digital assets? Let's break down everything investors need to know. This video is for informational and educational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. The first and most important point is that Cardano's recent decline appears to be primarily driven by a broad market-wide crypto sell-off rather than any specific issue with the Cardano blockchain itself. Over the last 20 hours, ADA has experienced a noticeable drop in value, but this move has occurred alongside weakness across the entire cryptocurrency market. The key catalyst behind this pressure is the latest shift in macroeconomic expectations following the Federal Reserve's recent policy decision. The Fed maintained interest rates in the range of approximately 3.50% to 3.75% and signaled a more cautious approach toward future rate cuts. Investors had hoped for a more accommodative stance, but instead, the central bank reinforced its commitment to controlling inflation, creating a risk-off environment across financial markets. When interest rates remain elevated and policymakers sound more hawkish, investors often reduce exposure to speculative assets such as cryptocurrencies and move towards safer investments. As a result of the Federal Reserve's messaging, the U.S. dollar strengthened significantly. The dollar index moved closer to the important 100 level, increasing pressure on risk assets globally. Historically, a stronger dollar tends to weigh on cryptocurrencies because investors become more attracted to dollar-denominated assets and government bonds. At the same time, leveraged traders in the crypto market faced significant liquidations. More than $400 million worth of leveraged long positions were reportedly wiped out within a 24-hour period. When leveraged positions are liquidated, forced selling accelerates market declines and creates a domino effect throughout the crypto ecosystem. This environment affected virtually every major cryptocurrency, including Bitcoin, Ethereum, and Cardano. The broader numbers clearly demonstrate the scale of the market weakness. The total cryptocurrency market capitalization fell from roughly $2.26 trillion to approximately $2.15 trillion within a single day, representing a decline of around 4.5%. Investor sentiment also deteriorated significantly, with fear levels rising toward what many market observers describe as extreme fear. During periods of extreme fear, traders become more cautious, speculative activity decreases, and even fundamentally strong projects can experience sharp price declines simply because investors are seeking safety and reducing risk exposure. Cardano's performance has largely followed this broader market trend, but ADA has underperformed slightly compared to the overall crypto market. During the recent decline, ADA moved from approximately 0.7121 to around 0.16027, representing a loss of roughly 6.4%. While the broader crypto market lost around 4.5% and the altcoin market, excluding Bitcoin, fell approximately 2.7%, ADA experienced a somewhat larger decline. However, this underperformance does not necessarily indicate a serious fundamental problem. Instead, it reflects Cardano's position as a higher beta altcoin. In cryptocurrency markets, high beta assets often move more aggressively than the overall market. When investor confidence improves, these assets frequently outperform. However, when risk appetite deteriorates, they often experience larger declines than the market average. One of the most important observations is that there has been no major negative development involving the Cardano protocol itself during this period. There has been no network hack, no catastrophic technical failure, no failed hard fork, no major exchange delisting, and no fundamental event that would independently justify a major collapse in value. In fact, much of the recent discussion surrounding Cardano continues to focus on governance developments, future upgrades, and long-term roadmap progress. This distinction is important because it suggests that ADA's recent weakness is being driven primarily by external market conditions rather than internal operational problems. That said, there are some Cardano-specific factors that may have contributed to the token's relative underperformance. Over the last day, several widely discussed posts on social media platform X generated debate around Cardano governance and founder Charles Hoskinson. Some of these discussions carried a negative tone and created additional uncertainty among investors. One prominent critic argued that proposed changes involving governance discussions could lead to increased centralization of community discourse. Other commentators suggested that Cardano has focused heavily on infrastructure development while adoption has not grown as quickly as some supporters originally expected. While these criticisms may not directly impact the network's technology or functionality, they can influence investor sentiment, particularly during periods when markets are already under pressure. Sentiment plays a powerful role in cryptocurrency markets. When traders become concerned about governance disputes or leadership controversies, even minor disagreements can become amplified. During bullish market conditions, investors often ignore such debates. However, during periods of fear and uncertainty, negative narratives can gain traction much more quickly. This can discourage new buyers from entering positions and make existing holders more likely to reduce exposure. As a result, governance-related discussions may not have caused ADA's decline, but they likely contributed to the overall negative mood surrounding the asset. Technical analysis also provides important clues regarding ADA's recent weakness. Several analysts have pointed to a fragile chart structure that left Cardano vulnerable to downside pressure. According to some market observers, ADA had been trading within what appeared to be a bearish flag pattern following an earlier decline. A bearish flag is generally viewed as a continuation pattern that can signal additional downside if key support levels fail. In this case, ADA was consolidating within a rising channel while momentum indicators remained relatively weak and significant resistance levels remained overhead. Another critical factor was the support zone between approximately 1640 cents and 0.700. This area had attracted substantial attention from traders because it represented a region where buyers had previously stepped in to support the price. For much of the recent trading period, ADA remained within this range. However, as macroeconomic pressure intensified and broader crypto markets weakened, Cardano eventually slipped below this support area and moved closer to 0.160. When widely watched support levels break, the impact can be significant because many traders place stop-loss orders just below those zones. Once the support level fails, those stop-loss orders are triggered automatically, creating additional selling pressure that accelerates the decline. This dynamic helps explain why ADA's losses became slightly larger than the broader market decline. Investors who were attempting to buy the support zone in anticipation of a rebound were forced to exit positions when the level failed to hold. At the same time, short sellers became more aggressive after seeing confirmation of technical weakness. The combination of forced selling, stop-loss liquidations, and new bearish positions can create a rapid move lower even in the absence of major fundamental news. Looking at the bigger picture, ADA's recent decline fits a pattern that investors have seen many times before in cryptocurrency markets. When the Federal Reserve adopts a hawkish stance, the US dollar strengthens, leveraged positions unwind, and overall market sentiment deteriorates, high beta altcoins often experience amplified downside volatility. Cardano appears to be following this pattern rather than experiencing a unique crisis. The price action reflects broader macroeconomic stress combined with some existing governance concerns and technical vulnerabilities that made ADA more sensitive to market-wide selling pressure. For long-term investors, the key takeaway is that there is currently no single smoking gun explaining ADA's weakness. There has been no catastrophic protocol failure, no major security breach, and no existential threat to the Cardano ecosystem. Instead, the decline appears to be the result of several factors working together. The dominant force remains the broader macroeconomic environment, including higher interest rates, a stronger US dollar, elevated market fear, and widespread crypto liquidations. Additional pressure likely came from governance debates, negative social media sentiment, and a technical breakdown below an important support zone. As always, investors should remember that cryptocurrency markets are inherently volatile and can experience sharp moves in both directions over short periods of time. While short-term price action can be influenced by macroeconomic events and market psychology, long-term performance ultimately depends on adoption, network development, ecosystem growth, and real-world utility. Investors should continue monitoring Cardano's roadmap progress, governance developments, and broader market conditions when evaluating future opportunities. Thank you so much for watching. If you enjoyed this analysis and want more updates on Cardano, Bitcoin, Ethereum, AI stocks, growth investing opportunities, and the latest developments in the financial markets, make sure to smash that like button, subscribe to the channel, and turn on notifications so you never miss our next video. Let us know in the comments below. Do you think ADA's recent decline is a buying opportunity, or do you expect more downside ahead? Thanks again for watching, and we'll see you in the next video.